Welcome to the Farms.com Risk Management Educational Grain Commodity Market School video series. This video series is being brought to you and sponsored by DeKalb Brand Seed to educate producers and farmers across Canada about grain commodity marketing. You can visit us at marketschool.farms.com. Well, in today's 27th video, we're going to recap and summarize all the videos of 2011. In this video, we're going to look at putting it all together for you. We're going to tell you what to look for, what to watch for in the future so that you can stay ahead of the so-called marketing game. Finally, marketing can be fun, simple, and successful. I know everybody thinks it's complicated, but hopefully I've simplified it for everybody. So let's start off with marketing is more of an art than a science. I love to say that quote. Don't try to do what that guy's doing, where he's trying to look at his crystal ball, trying to predict the future is not going to work. Don't even try it. There's no specific model to follow, and every year can be different. Some years prices are higher, some years they're lower. Have some understanding of the seasonality. You can see from this chart there's a seasonality. We seem to go up and down largely because of either more supply or less supply. There's a lot of other moving factors that affect that supply, but have some understanding of that seasonality. When you are ready to sell, sell at the top, try to avoid the bottom. Some years prices are higher and others they're lower. As I said earlier, 2012 could be totally different from 2011. Learn to adjust your expectations. If you're at the bottom, be patient for markets to turn. Remember, Babe Ruth never batted 1,000, but he was one of the very best to ever play the game of baseball. And you too can be the very best in marketing moving forward. Do not expect perfection. Don't try to achieve top 1% of prices. Only if you try, failure will most likely follow. All you're really looking for is the top third or top 25% of prices. You can see from the corn futures chart this past year that you could have sold in the top 25% of record prices. Don't forget to have some understanding of your cost of production. Futures do not care about your cost of production, but knowing when to take a profit can help you learn to pull that trigger. When market prices are high, don't be afraid to be an aggressive marketer and vice versa. The futures prices on Chicago is just that, a number. Don't forget to translate that number into a dollar per bushel or dollar per acre. It can make a lot more sense. It will open up your eyes to how much risk you're leaving on the table or reward. Remember, do not live in the past. We can only live in the future. We can worry about the future, and we do something about marketing in the future. Learn from your mistakes. We've taught many times here in the past videos that your biggest risk is price, not basis. But don't ignore basis. Get to know basis, understand it. It's not that complicated. Understand the historical highs and lows in basis. When the time is right, just like in futures, don't be afraid to pull the trigger. When I have a plus basis, when I add that to a plus or a positive futures price, I get a greater plus number. That's simple math to me. That's a successful marketing plan. Remember, doing a basis first contract is committing to delivering bushels at harvest. However, if you do a futures first only contract, you can always buy that contract back if prices are lower because perhaps you didn't plant enough acres or the yield is lower than expected. Only book forward up to 100% of your guaranteed bushel yield in any given year. Try to use storage bins, or if you don't have storage bins, use futures and options as an alternative, as your backup plan to hedging some of those bushels forward. The best basis typically in any given year is usually at harvest, once everyone's done selling, typically near that holiday season, Christmas holiday season. And you can see from the chart there, this is a soft red winter wheat. That's a very good basis, and producers need to take advantage of that. Don't ignore those managed money and index fund speculators. I know you call them your enemies, but they're actually your friends. As you can see from this chart, they were very long in May of this past year, and then they slowly started to sell. When they're long, you need to be selling into them, particularly if you're at market highs, seasonal highs, record highs, top 25%, pull the trigger. When they are bearish or very short, when those managed money or hedge funds are bearish or very short the market, ignore them. Take a contrarian view. It's worked for me many, many times. You can see from this canola futures November 2010 daily contract that you know, historically we're trading at long-term lows. Everybody was bearish on production. The funds and the USDA have increased volatility by 50%. So understand that your volatility has gone up. In other words, the price of corn can go up or down by 50% in a week, not a month, not a day. We can't ignore China, emerging market growth, growing populations there, livestock and middle class growth. Growing incomes are demanding more grains and protein consumption. Feed demand also continues to grow, causing export demand to increase. Keep an eye on political landscape as well as global trade policies and export bans. Watch the stocks-to-use ratios both in the U.S. and globally for perspective and for future trends. Keep an eye on the US dollar index because the lower US dollar makes the foreigner's purchasing power greater. Lower US dollar stimulates export demand as most grains are priced in US dollars. Don't ignore the Canadian dollar. It is also very important. It can affect your bottom line. A lower Canadian dollar can help drive exports, while a higher Canadian dollar can widen your basis levels. And you can see from the chart there that the Canadian dollar was low for many, many years, but all of a sudden it's causing some headaches for livestock producers the past few years. So that ends part 1 to today's video, putting it all together for you. Please join me in part 2 of our next video to conclude our grain commodity educational video series. Until then, thanks for watching.